Good afternoon, everyone. Thank you for joining in to this InvestingNote Trading Cup 2022. So InvestingNote Trading Cup 2022 is organized by InvestingNote and supported by Bursa Malaysia and also sponsored by NagaWarrants by Kenanga, Afin Wang, and FSM1. So InvestingNote Trading Cup 2022 is a simulated trading competition where you can go head-to-head with other traders. And using a virtual capital of 100,000, you are able to trade equities, ETF, and also warrants using real-time market data in this competition. This year around, you were able to get a chance to win a 30,000 worth of cash and prizes. And on top of that, you actually can just register yourself and make 3 trades, and you're able to have a chance to get to this lucky draw where you are able to win Sony PlayStation 5 or maybe Samsung Earbuds Pro. So if you haven't joined for this competition, you can go to investingnote.com to join this competition straight away. And and to be honest, right now, let's go into our current progress of this competition. So right now, I will share the screen for this participants' progress and performance. So as we can look into it, so we have the top 3 of the participants already making returns of double digit, where the first one is already making for 13% by this Sky Xia. And then the second one, it's even more fantastic because he's making around like 12%, where he actually, by yesterday, it was like ranked 2,000 something. And within a few day periods, he already come to like the second rank. So the other Sky participants, he's making really good trades. And let's look at what kind of a trades and counters he's actually playing on and actually trading on. As we can see here, he does use some of these warrants, but these warrants, apparently right now at the moment, it's having quite a big changes. So as you can see, this real market data, this is what we call like real market data. At the beginning time, it is like making a very good profit and loss. So right now at the moment, it's like literally the other way around. But at the same time, he also trade this quite a popular stock since last week time. The third stock here, this Cycorp. Cycorp is a stock where they actually announced a very good quarter report last week and last 2 weeks, something like that. And apparently the stock is like flying skyrocket. So to be honest, I believe most of the participants, the one that actually top 5 of it, let's say if they have traded for this stock, I believe they have already making a very good returns from it. And to be honest, these participants, right, I'm quite impressed by their performance, given that, you know, at the current market environment, it is having a very high volatility trading sentiments, where you can actually see that in June time, people are actually very pessimistic, and suddenly, all of a sudden, they started to rebound into July, and all of a sudden, people are saying that the bear market is no longer there. And there is this specific statement where they stated that because the market has been going up for like more than 20%, so it's considered the bear market is over and it's already opened up a new bull market. But remember very well, ever since Federal Reserve in the US mentioned they will continue to aggressively increase the interest rate. So straight away, we can see that right now the market is already going back to where it is around June time. So if there is only a word to describe such a market volatility, we can say that this is a roller coaster market where, you know, prices are going up and going down within the weeks of the time. And, you know, it's very hard for investors or even for traders to just trade on this market. And from there being said, even harder for investors to maintain their mindset and their strategy plan and all this stuff. But today, we are honored to invite our honored speakers here today, Isabelle Zhen, and perhaps she will help us to go through how can we, improve our trading plans, and also how can we utilize some of the specific assets in this market. So, ladies and gentlemen, let's welcome our honor speaker today, Isabelle Zhen from NagaWarrants by Kenanga. Hello, Isabelle. Good to see you, Isabelle. How are you doing today?
Oh, very well, thank you. Excited to be here and excited to see the performance of all the participants of the InvestingNote Trading Cup 2022. Thank you so much for having us on board, and we'd love to share something useful with you this afternoon. As you guys eat your lunch, Dibo and I will be talking.
Exactly. So at the moment, as I was mentioned just now, the specific asset, it was this warrants, where, I believe a lot of us already know that warrant we are able to trade in bull market and also in bear markets. But to specific on how can we utilize warrants in different markets, how can we do so, right? Isabelle, can you share a little bit of experience you have in this warrants things?
Well, in terms of the trading competition, of course, you're going to have the first few days, and you guys might feel a bit of an ache when you see somebody outperforming you in the first 3 days. We barely started this competition Monday, Tuesday, Wednesday. Today's only the third day in.
Yes.
And bear in mind that some people, it is the idea of whether you're trying to win the competition and win that 10,000 ringgit, or whether you're trying to actually use InvestingNote Trading Cup as a platform for you to just trade and learn and practice your skills. For example, learning to trade about Hang Seng Index put warrants or call warrants that you might not have the capital to or the bravery to in real life. So there are many things that this trading cup can offer you, and a lot of prizes as well, I believe, for daily winners, which is very cool incentives, not just for the top 5 or the top 10. There are 5,000 over people participating in this trading cup. So don't worry about it. Don't stress too much. I would say to most of the participants over there, try to learn something new, not just aim for the highest return, and then that won't really sustain you in the long term. It's not very realistic for life. You don't just make 90% one trade and you retire.
Yeah, exactly.
You need to have consistent returns, and they can be small, few percent returns many times over. 5%, 5%, 5%, 5%, 5% over, let's say, 25 days is already more profitable than you gambling everything every single time, hoping to be latched onto the penny stock rally or to a stock that's going through a pump and dump. So consistency is what I like to see.
I see. Okay. But in terms of, let's say, if we will talk about to utilize warrants, right? Like, how can we do so in this platform being, let's say, in this competition as well? How can people actually try to, the way that they can actually play on? How can we do so for that?
I prepared a few slides for you, so you guys can have a look. So pretty simply, over here, what we're going to do is, instead of letting everybody focus on many stocks, we only speak for this trading commentary that we're offering, it's only going to be 3 times in the next few weeks. So you've got today's, next week's, and one more Saturday.
Yes.
I can tell you something that's going to be moving this week. You got a few hundred underlyings to look at, right? A few hundred underlying stocks. Why not just focus on one underlying stock that is proven to be crazy volatile? You can make money going up, you can make money as it comes down as well. And that, of course, is the Hang Seng Index that we have call and put warrants on. So we're just going to cover 3 really easy slides, if you don't mind me sharing with you guys.
No worries.
So the first question is, of course, what's the trends, the long-term trends for Hang Seng? As you can see, I zoomed out. That is a really, really long 1-year chart over there. So let's see. I love drawing on my slides, so you guys can have a look. So 1998, all these years, these are annual charts. But you can see that long-term, it is an uptrend, right? The market only has 3 trends. Uptrend, downtrend, sideways. So over here is a monthly chart. You can see 2022, and that's already crazy volatile. From, say, even in 2022 at the start, somewhere around here, market was 25,000, and right now we are at 19,000. And if I just do some simple technical analysis of support resistance lines, there was a temporary support over here, but you can see it possibly could be breaking down today.
True.
Could be rebounding. Up to you, your own technical analysis view. But let's say if it does tank down, you got something over here, the long-term downward channel over there, right? And let's say even for now, that is 19,000 or so. Apologies, I screenshot this yesterday before I got here. So 25,000 to about 19,000, that's 6,000 points. But for a trader, what does 6,000 points even mean, right? It's just a random 1,000 million gazillion number.
True.
So let's say for a small little range over here, 22,000 or so to about 19,000, that's 2,000 points. So what does this 2,000 points actually mean when it comes to trading? Let's say from here, 20,000 to 19,000. That's the range we look at for this particular session. 1,000 points, okay? So for this chart, Hang Seng put warrants, I'm looking at HSI, HES, for example. Put warrants for Kenanga.
Okay.
We put them pink as puts. So this part over here, this part is pink. This heading is pink. That means it's a put warrant. It's a H. From the top to the bottom of this 1,000 point range, you can see that what happens here is 5. To make it easy for you, I just put the big numbers. But here's 5.56, 6.57. That's the bid and ask. That means for the 6.5 over here, 6 cents is bid. 6.5 cents is the offer or the ask price.
True.
So let's say even if I'm trading Hang Seng and this chart, it shows since last week, 31st. 2nd is when we had the start of our trading cup.
Okay.
5th is when we had the start of our trading cup. And 6th, so this is Monday and this is Tuesday. You can see how volatile it was since last week. 1,000 points, no problem for Hang Seng. And that's counted as a quiet week on the Hang Seng index. So if I was trading for this competition, all right, I would be looking at something like this. I just need to focus on one underlying. I can gain from downside using a put warrant. And then I look for the corresponding call warrants as well, which is a HSI CJK. And I can maximize on the upsides if there is a market rebound. Okay. So on my trading platform, I'll open up the Hang Seng index chart. Okay. I have 2 of these weapons ready. One call, one put, ready to roll, whichever I feel the market gives me a technical analysis indicator. So let's say for this fella, like I said, 1,000 points, 2,000 points, who cares? How much money am I actually making, right?
Yeah.
So if it's how you calculate ROI is the new minus the old divided by the old. That means if, let's say over here, I notice that 8.5 I picked up over here, I noticed that it's going to be tanking downwards. So I picked up something here, put warrant all the way, and I just sold it at 8 cents, which is somewhere 8.5. Oh, sorry, I bought it over here at a higher range. That means this would be 7.5 because I need to buy the offer, right? Here's the offer. And then take profits here. So this kind of range, quite short, that's already 6% ROI.
Leverage return.
Yes, leverage return. But that's quite simple for just a one-day trade. And that's just one example of what you can do with a put warrant on a crazy volatile underlying stock
Underlying.
or underlying index.
Yes.
Same thing as well for the call warrants, it works the other way. Let's say if I picked it up at 10.5, so over here would have been 9.5/10. I pick the offer, sell it at 10.5. So something like that. That kind of range is very tight, very small, and already 5% ROI.
Exactly.
So something like 5%, 5%, 5%, 5% over 25 days
Yeah.
of your trading cup. And I'm not even asking you to capture the whole rally. I'm not even saying capture this whole rally downwards. Just something consistent. Preserve your capital. Preserve a trade consistently.
And make the right trades.
Yeah, and make the right trades and stick to a
Exactly.
tight cut loss.
Exactly.
My advice is for people, if you're trading these very tight ones, what I did was I looked at the live matrix over here, which is on NagaWarrants.com/live matrix. I looked at all the prices here and I just plotted them on my chart.
Okay.
So what I did was I just plotted them on my chart over here so I can tell when it's going to flip, the warrant price. If that makes sense for you guys. I know it's a bit of work, but I think it is a very promising strategy.
Yeah, and especially it has a very disciplined risk management, and also, just consistency is the main thing. As in, throughout the whole competition, if you are able to continually making like 5% per day, I believe like your trades and even I would say your trading plans, your returns, it will be much more secure, as rather than you just put it into a single warrant and unrealized loss is going up by like 90%, 100%. But what if, let's say in a single day, it will come back to all the way where it is as well. So consistency is always the main thing when we are trading the warrants. But if we are talking about trading on warrants, perhaps Isabelle, can you share a bit of what are the things that investor will have to be aware when they are actually trading on warrants? Because warrants always have this conception, meaning to say they are difficult to trade and they complex and all this stuff. So what are the things that investors actually have to be aware about?
Oh, this one I can talk about for another hour if you let me.
We are willing to learn.
The thing about warrants is there are many risks involved that many individuals are familiar with. For example, time to expiry, whether warrant's going to expire, and that's different from the last trading date. So last trading date is not the same as expiry date. Last trading date is 3 days before the expiry date. So it's totally different. That means the warrant is suspended.
Okay.
It's not the same as expiry.
Okay.
And there are things like, for example, the previous problems a lot of traders had is they always wondered, hey, you know what? I bought this warrant at 3 cents. Why is it, say we buy the offer at 3 cents.
Okay.
Why is it taking so long for it to become 3.5? The underlying, the mother share, as retailers put it, has gone up 20 cents. Why is the warrant not moving? Why is it still 3 cents on the bid, 3.5? Stuck. Something is wrong with this warrant. No. But the reason is, it is most probably a very deep out of the money warrant. That means it's very tick insensitive. On the live matrix, there will be many ticks before it would flip, before you can break even on it.
I see.
So my recommendation to get, instead of remembering all of these complicated problems, stick to the Musty Strategy. So the Musty Strategy was something that we came up with at NagaWarrants, and Musty stands for MESTI. Musty gunakan Musty. Okay? So M stands for using a live matrix. You need to see whether the colors of the matrix, it's green, yellow, or red, indicating whether the issuer has increased the offer, increased the ask, or run out inventory. If it's a red color, that means issuer has no more inventory. The prices will be very different. M also, for the matrix, besides the traffic light feature, it also shows the gray and white zones, which is how many ticks to flip. And also it shows pink for puts. So some people, they might buy a warrant, they might not realize that it is pink for puts. So, it could be quite different on whether it looks, they buy a call warrant thinking it's a put, or they don't realize that C is for call, H is for put.
Yeah, that,
right?
Yeah.
So all of these things can be helped with the Musty Strategy. Second is we look for high effective gearing.
Effective gearing.
E, right, for Musty. Balance with high, very sensitive. That means few ticks. So you want it to be high effective gearing and few ticks. That is E and S. T, make sure there's time to expiry. If your warrant, say, has 6 months in its lifespan, avoid the final month because time value decay is very high. And I, look for a credible issuer that picks up your phone calls, loves talking to you, and if you have any problems, you can always WhatsApp them, call them, Telegram them, Facebook them, Instagram them.
Okay.
Some issuers I know, I've heard, they don't even pick up the phone calls. So it's up to you when you trade those warrants. A chunk of risk. So when you remember this 5 Musty, MESTI, and you look at them all the time, you would automatically solve a lot of your problems. For example, not knowing when it flips, seeing how many ticks it takes for out-of-the-money warrants to flip, forgetting expiry, and not knowing who to call for clarification if you get confused.
Exactly. I see. Yeah, it's actually very easy to remember this metrics, this musty, it's like musty conservative, musty risk management. So you have to really remember about this approach and when you're trading on warrants. But can you, speaking of this trading's experience, right? Can you share a little bit on what is the key thing that you think is the most important in terms of tradings?
The most important is a loaded question. There won't be most important, but I suppose let's assume we're talking to somebody as a beginner. Because as an experienced individual, some people have different problems. For me, cutting loss is no problem, but for somebody else, cutting loss is impossible to do. I can't cut loss. I just can't press the button. Every time I press it, my hand pulls away. I can't cut loss. And some people, on the other hand, maybe you might be excellent at taking profits, but another person might find it impossible to take profit. Instead of taking profit, what they do is they screenshot and they show their friend, but actually they never even take profit from the actual stock. They just like having the unrealized P&L.
Paper gain.
Yes. So for me, maybe 3 things when it comes to being the most important for somebody who's just starting out trading. Firstly, understand where trading fits in your life. How you trade is totally different if you are a PDT, there's a proprietary day trader or a company trader. These guys are trading intraday duration, big position sizes, and their eyes are constantly glued onto the markets. They are in it, they're in the matrix, they are totally immersed in the world. Second category would be something like a retail day trader. They are also intraday. They have more conservative position size because they don't have unlimited bullets. They also have their eyes glued to the screen. And the third category would be somebody like a long-term value investor. Long-term value investors, they will be very long-term in duration, 2 years, 3 years, 5 years, even 10 years. They are diversified and they ignore market fluctuations. They don't care about 3%, 5%.
True.
They're looking at long term.
Yeah.
For Trading Cup, unfortunately, it's only 1 month. So it depends on a different strategy that you're using. Avoid taking advice from people that have different trading goals from you. So even if you have a friend who is constantly day trading every single day, and he's like, today Syscorp is flying, tomorrow a different penny stock is flying, your trading strategy is very different from somebody who's trading every day like that.
True.
People always tell you what to buy and what price they got in. But they will never call you up and say, hey, Dibo, the Syscorp that I entered, right? I actually am getting out today at $1. You take profit also, okay? They will never tell you that, right?
Exactly.
And then when you speak to them a few weeks later, hey, what happened to that company, the Syscorp? It went up, it went down, what happened? Or it went up and it flew to the ceiling, what happened? Oh, I exited that 2 weeks ago, 2 months ago.
Exactly. That's always happening between people.
I don't really like that, but they never really tell you what time they're exiting, what price they're exiting. So I won't use that as a useful source of information. Second thing is learn about personal finance, learn about weighting your portfolio. Do you rebalance annually? Do you rebalance according to price? Money management, risk-reward ratios, your personal cognitive biases. And thirdly, for the most important thing, accept what you can change and ignore stuff that you can't change. Like if your personality is you take profit, no problem. Your stop loss needs some work. You focus on learning how to stop loss better. If you have a full-time job, you've got 3 kids, 2 cats, you don't lie to yourself. You know, you can't trade full-time. You need to adapt your trading style.
Yes, exactly.
If you're full-time students, maybe you can trade more. You have more time on your hands, but you have lesser bullets. As in your capital is less. It won't be maybe 100K, 500K. It might be 5K or 1K. Then you would adapt accordingly. You would look for stuff that is leverage, like warrants. If you have smaller capital, but you need to put in more homework. So it adapts. It's according to you. So there are different styles of trading for everybody, if you ask me. Trading and all instruments you use, stocks, warrants, futures, ETFs, ETFs, cryptos, real estates, they are a slave to you. You know, not the other way around. You don't trade warrants for the sake of trading warrants. You are using it to serve your purpose. You are the master.
Yeah, exactly.
Yeah.
True. I totally agree about like knowing about yourself before you try to going into, as in trade what kind of a stocks, what kind of a style. Because this is always what I told to my client as well, like all the time, wherein I will always analyze what is their own lifestyle and also what is their resources, whether do they have sufficient time, or do they have like big capital, or do they take big losses, conservative, aggressive, all this stuff. So depending on different kind of personalities, they always comes with, you always have to pair them with different kind of strategies. Like they literally don't have much time resources. So most of the time, they actually should just go for like long-term dividend investing, value investing, growth investing, and all this stuff. I totally agree about that. And for those people that actually have the resources as well as the information, they are the one, you know, literally they can go into the markets and glue their eyes into the monitors and try to trade more and try to accumulate more as much as possible, something like that. But speaking of this tradings and about this experience, like, do you mind sharing your own trading experience along your trading journey? Perhaps the audience and the participants can learn more about it from your experience, you know.
Oh man, my own trading journey, I can tell you, I have made every single mistake in the book. Every mistake that you can think of, I've made it, all right?
Okay.
I've been egoistical when you shouldn't be egoistical. I've been conservative when you shouldn't be. I have done every mistake. I have made technical indicators suit me rather than me following the technical analysis indicators. Every mistake. But I know I'm forgetful, and I made my mistakes very early on with a very small capital.
Okay.
So I didn't lose my pants, so to speak. I just used a very small capital, used that, and made every single mistake, because mistakes, when you make them, you will analyze yourself, you will learn the lesson.
Exactly.
Right?
Yes.
If you never made the mistake, suddenly your capital might have grown a lot based on pure luck.
Exactly.
And then when something terrible happens, like say COVID, you're stuck, you don't know what to do, you could lose everything.
True.
But if you've already learned cut loss, you're very good at analyzing, when it's a down market, jump to put warrants. When it's an uptrending market, look at calls, or whichever way you're looking at. For me, when I learned trading, and even until now, what I do is I jot everything down onto my charts.
Okay.
So let's say I'm looking at a specific stock.
Okay.
And over there on the candlestick charts, I would actually write down the buy-sell price, the quantity that I'm entering. I can easily put an arrow over there. I entered this day, and the price and the quantity, and I write the reason why.
Oh, okay.
I can write here, number 1, Fibonacci reversal, a Fibonacci pullback. Number 2, Japanese candlestick confirmation coming up, KIV. Watch it.
Keep in view.
Yeah. And watch, price may cross moving average, keep in view, or maybe whatever reason I used. And then I can see whether my reasoning was justified over time. Time will tell whether you're a good trader or not. So for trading, I jot it down. Every entry point, exit point keeps you accountable.
Okay.
And for learning and life, I write everything on paper. I'm old school that way.
Oh, okay. Yeah, that's actually a very effective trading plan and a very good discipline that you have, to be honest.
Only because I'm very forgetful, okay? So I know my mistake. I know my personality, you see.
And this is what you said just now. Like, if you are bad at taking profit, so try to learn more about taking profit. Try to enhance your weaknesses and make it to be like, at least you are balanced traders. And from there, you're able to make literally like warrants. It's go for bull and bear market, but you got to prepare yourself as well, going for bear and also bull markets.
Yeah, so if you don't know how to take profit, then learn about trailing stop losses. 1 bar candlestick trailing stop losses, 2 bars candle stop losses. You put a stop loss on top of every single bar. Instead of letting it all retrace down. When it retraces past the bar or bearish engulfing, then that's where you take profit. You learn these kind of strategies if you know that you're not so good at that.
True, exactly. Because, but to be honest, when we talk about this trading plans, as you mentioned, right, I can see that a lot of traders, they still face a lot of challenges, especially in terms of this trading mindset that they have. They always being affected by their own emotion. For example, when the price is going up, it's all the way uptrend. Human, we are always like having a imagination saying that if good thing happens, right, it will definitely goes on continuously. So that's why people always like, they know about the trading plan, but they always affected by their emotions. So Isabelle, can you share a little bit like how can we, try to tackle about this emotion parts?
Oh, the tricky part is, as humans, we are conditioned to thinking, especially since a lot of people are becoming entrepreneurs these days.
Exactly.
And they're always positive mindset, growth, be strong, be courageous. True, you gotta be strong, be courageous, and you gotta be positive. But when it comes to trading, you can't be overly positive. You need to actually be like a robot. One of the best trading advice I got was when I was at my previous company. I was at PDT, trading structured warrants. And they said, one of my senior traders told me, yes, you got to trade like a robot. Your system says stand, your rules say stand, you stand. It says sit, you sit. You just follow. In life, positive, positive, positive. But when it comes to trading, follow the rules. You can't say it's past my stop loss. But in life, we must be positive. So let it go down below my second stop loss. I am still more positive. And it goes down, it doesn't work like that.
Exactly.
Yeah.
True.
So I would say avoid itchy hands by over trading. Before I trade, I force myself to do something else. I would take a nice big glass of water if I sense that I'm going to do something before my trading rule tells.
Okay.
Or I'll go and apply mascara, I'll go to the restroom for a walk, so I don't make rash, impulsive decisions. Especially in the morning when it's the first volatile few minutes. For Bursa Malaysia, it could be 9 a.m. to 9:15. Market is very volatile in the first 15 minutes of price discovery.
Yes, exactly.
Hang Seng, 9:15 to about 9:30. Unless I plan the night before, I want to take profit at the highest possible market fluctuation. Then maybe queue or hit a high price. But if I have no plans to do anything, don't jump in. Just because the price is doing something crazy.
Following on your own pace, and rather than just go into the market because it's going up and just jump into it.
Yeah, so that's how I would get rid of emotions. Go to walk in the restroom, go do something else when I feel that I'm being emotional.
Okay. That's actually a very good suggestion because it's like a triggering action.
Circuit breaker.
Yes, exactly,
right?
exactly. Like circuit breakers,
Yeah.
as in whenever you are, not to say, because we are human, as you said, it's always like we are filled with emotions. Let's say the trade is ongoing that way, and we never know really like we are feeling greedy or anything like that. But if you have these circuit breakers, then you will instantly know. You know, you drink a big glass of water, suddenly you just think of, hey, am I being greedy? Exactly. And
Yeah.
then you will try to think rationally instead of just emotionally take profit, something like that. That is actually a very, very good suggestion from Isabelle.
I
Thank
told you I
so
made every mistake.
So you learn from a mistake.
Yeah.
Yeah. So
Hopefully
definitely
you
we
guys
have
can learn
to
from my mistakes.
Exactly. Definitely we have to learn from you, Isabelle. So, but in terms of, as we say, like improving in as the times goes by, right? In terms of improving your own trading skill in overall, like maybe in terms of like accuracy and also risk management, how would you suggest ways to improve on this kind of areas like that?
There are many different new systems, new strategies, new algos. And if you see all the ads on Forex
Yes,
futures,
exactly.
it is people are constantly giving you the new
Exactly.
latest thing.
Exactly.
And nothing wrong with that. I love technology, so you should always be learning new things. So yeah, by joining webinars, the free ones on Bursa Marketplace, that's always excellent. Or joining trading cups. I would use, and the thing is, about this trading cup, what I really liked about the InvestingNote Trading Cup is that I noticed some of the traders, when they actually do have comments over there, they have very useful comments by some people. Of course, some is not very useful comments where they talk a bit of nonsense. A bit like, WhatsApp group chats.
Yeah, exactly.
Or like Telegram groups.
Almost like a forum like that. Kopitiam forum,
and they're
something
just like,
that.
no,
Yes.
good la, bad la, whatever nonsense talk. But for this trading cup, what I realized is there are people who comment and they give you full-fledged, well-researched comments.
Okay.
So as a beginner who's learning more about risk management and all these other things, read the comments as well. I think it's quite useful. There were a few comments that I thought were quite impressive from the people who were looking at warrant trading.
I see. Yeah. And through this platform, you are not, as just now the previous discussion we have, like not only learning from yourself, making your own trading plan, but you're also able to learn from others as well, as you can able to see what kind of orders they are making, what kind of price they are entering, and all this stuff. So you're
And
able
see their
to get
mistakes
a sense.
as well.
Exactly. So learning from others' mistakes as well, and I believe this is a very, very, very good platform for participants and also the others audience. You can just go into InvestingNote and just look into it and try to get a sense of it and all this stuff. It's a very, very good platform, and to be honest, but like let's say we are going for like beginners or maybe the participants, okay, like do you have any advice for them so they can able to prevent some of the trading minds,
Trading minds like landmines, like mistakes?
yeah, almost like a trap like that. It's like trading traps, like perhaps people always they always look at, like for example, some of this penny stock, they goes up so high, and then they always have this thinking they want to just go into it. Now, is it a trap? Is it not a trap? So how can we, avoid these kind of things? Something.
Who knows if it's a trap or not a trap, right? But let's say, and I won't be so conservative to say, avoid everything. At the beginning of the 2020 Rubber Glove Rally, people did not believe it was a rally, right?
Exactly.
Who knows?
Exactly.
Right? I would say for slight gambling or slightly more a portfolio, say you've got your 100,000, let's say you can put maybe 5%. Realistically, maybe you want to trade differently for the trading cup. I don't know. But for real world, real life, real money portfolio, set aside maybe a few percentage of that portfolio and consider that your gambling portfolio. So if you want to if you just can't resist and you want to take part in a stock that doesn't even follow your rules, your rules have nothing that shows something that has IPO. How do you do a technical analysis on an IPO stock?
True, exactly.
There's 3 candlesticks there. What can it tell you? 1, 2, 3. What
yeah, true, exactly.
So 5% of your portfolio, up to you how much you want to put it into your real life portfolio. But set that aside to be your highly risky, slightly gambly, slightly speculative portfolio.
Okay.
You don't manage it.
Okay. Meaning to say like putting a smaller allocation. So, if you think that this is like slightly fishy or like you think that this
slightly
trade
fishy,
is
slightly sus.
exactly, this trade is a bit high risk,
But
it's not
everybody is
suited
in
to me.
it, and I just need a piece.
Exactly.
Yeah.
So perhaps we can just put a small allocation into it. You participated and you're able to take the losses anyway.
Yeah.
So you're able to learn from it as well at the end of the day. So
even something as small as 1%, if you really feel like you can't stop yourself, oh, I need to have that chocolate cake, you just need to, then do it the smart way. Portfolio allocation, 1% of your portfolio. The market will keep us humble. It keeps us very honest.
True.
So maybe you made money from this particular pump and dump. But can you do that for the next 10 years? That is the question.
Exactly.
It's not consistent.
Exactly.
Maybe you made money from one time in 2008, and you keep on trying the same strategy because it made you that money one time.
Exactly.
Right?
Exactly.
Not consistent.
Not consistent. Exactly.
So yeah, you should make every mistake, but use a very small amount of your capital, and the mistakes will be painful, but it won't be expensive mistakes, and it won't bankrupt you.
Exactly.
You can't walk without falling down first. So fall down, but make it an inexpensive fall down. Wear some knee pads.
True. Make risk management. That is the key thing. That is actually very good. But also to these competitions, right? As we can say, like there are so many stocks. Even in this competition, I can see that there are like around, including the ETF and warrants and all this stuff, there are around like 900 stocks for them to trade on and for them to invest, play on. If we would like to try to narrow down for the participants, how would you screen this stock to suit to your own investment strategy?
Well, before I continue with this, I just want to remind the traders who are trading on the Trading Cup that there are a few stocks I'm aware that are missing from the current list of structured warrants. We will be dumping them into the trading platform this Friday.
Oh, okay.
And the rule for most of the most of the warrants that are available on the the InvestingNote Trading Cup, they have been filtered. So there are stocks that are above 5 cents.
Okay.
Structured warrants that are above 5 cents. And they have more than 60 days to expiry. So there are filters in place already.
Okay.
So just remember that when you go to the real world and you're suddenly like, oh, the stocks are 1 cent actually, and the warrants are 1 cent actually. So just remember these things. But on Friday, we will be having even more structured warrants put into the trading platform for next week's trading. But when it comes to actual choosing, actual filtering for yourself,
exactly.
Easy. Choose stuff that works already. FATA is a fantastic strategy. Fundamentals to choose whether it's a fundamentally strong company. See whether current price is below the intrinsic value or whether it's above. That means it's overvalued. Below means it's undervalued. Potential to normalize. You can consider the canceling methods. You can read analyst reports to see how they analyze the financial statements of the company. See whether it's healthy.
Exactly.
And then secondly, the TA part, which is technical analysis. Really, technical analysis, it determines 3 things. Entry point, stop loss point, take profits. That's all you care about.
Yes, exactly.
So if you want to use your ROIs to be boosted, structured warrants, then you consider using the Musty Strategy. And we have all of these things on our Kenanga YouTube channel, Kenanga channel. Yeah.
Exactly. I believe it's more like, as we mentioned in the middle of the discussion, like knowing yourself rather than knowing all of the 900 stocks.
Yeah.
Knowing yourself.
Who has time to go through all the 900
exactly.
and analyze everything?
Yes. So knowing yourself, knowing your own personality, and using this platform, try to get an idea of what kind of investor are you? Are you a conservative? Are you an aggressive type of traders? And then from there you're able to go into the market. This is like a virtual capital. It's no risk at all. But if you are able to learn something from these competitions and then go on to the real market to grow your own capital, that would be the real skill that you learn actually from these competitions.
Yeah, I would love to see people for a few months from now after the InvestingNote Trading Cup is over. I would love to have a chat with them and see whether they actually managed to follow through.
Exactly.
And I know in the final few weeks, we'll be interviewing the winners as well. And that'll be very exciting because we can see their trading mindset, the strategy, what works, what didn't work.
True.
So that'll be a nice conversation to have with people who are, to see whether it was, what is the mindset behind it?
Exactly.
Not just, oh, it's luck, you know, he made it in the first week. And sometimes to win these virtual competitions, you have a different strategy from the real world, which is, say you won 100%, 90% in the first week.
Exactly.
You want to win, right?
Exactly.
So what will you do? You stop trading until the end. Right? You read the T&Cs for InvestingNote and you're like, oh, I must have minimum 3 trades. I made those 3 trades. I just faster break even on 2 others to hit the criteria.
Exactly.
And then I just wait and collect my 10,000 ringgit. That is different from the real world.
True. Exactly. True.
So Trading Cup is extremely useful, but remember to transfer the right skills to your real life, real money portfolio. Don't get confused by all of these games.
Games, exactly.
You know,
competitions.
learn the right things from the game.
Yes, exactly. Try to learn something.
The right lessons.
Exactly. And so, you know, like for the audience out there, so remember to stay tuned even after the event is coming to a close. Even if you are, you know that perhaps you are not in the top 3 or something like that, the
Never
prizes,
mind.
it's okay. You know, you can just go through together with all these webinars, and there, you know, you're able to learn something, even, you know, from the winners, and let's go through into their mindset and their trading strategy and whether it's a good one or whether it's a bad one. So from there, you're able to, you know, analyze and also learn from them as well. So it's a really, really good platform to go through on. But for, let's say, if we are talk about this positioning, right? So how many position do you think an investor should hold at a particular times, something like that?
Let's say for this Trading Cup.
Perhaps we can just put into 2 different scenarios, like trading cups as well. Like in real life, how would that be? You know, as in as a traders, you know, how much of a position should they have in terms of their portfolio?
That is a really complicated question with no short answer.
Okay.
You would, of course, have your weighted portfolio where you have a risky side and a less risky side. You can consider using the Barbell Strategy where 80% of your portfolio is in very stable returns.
Okay.
3% FDs, 5% for, say, 5-6% ASB, some people, and maybe 8% for bonds if you're lucky enough to pick up bonds at the right price. But something that has that 80%, which is more stable. For maybe somebody like you, that is not stable. That's like 0 risk. Maybe you would like something like the ETFs available.
Yes, it's like passive investing.
Yeah, you can use whichever of the platforms available now. There's like StashAway, Whitehead Invest, MyTheo, KDI Invest, all excellent platforms they can use to enter the micro ETF scene.
True.
And that can be a percentage of your portfolio, the less risky side, but you weight the barbell. That means the weights on the end with things which are a bit more risky, like structured warrants or whatever that you find risky. So 80% of your portfolio is relatively in a
stable,
conservative, less risky products, but the 20% can have the potential to boost your ROI.
And your portfolio.
And the whole portfolio.
Yes, exactly.
Without having to risk 100% in fully risky products. So, yeah.
Okay. That is actually a very easy way to, you know, just manage it, to be honest, because it's 20% risky parts, to be honest, if let's say we talk about...
And that's a lot already. 20% is pretty heavy.
And it's not going to be like 20% you put it into just a single position and all this stuff. Perhaps like at the beginning where Isabelle suggested, you know, the Hang Seng warrant. So, you can put up that one. I would say that one will be a slightly higher allocation, putting up because it's an index. You don't have to worry about the underlying being not enough volume and all this stuff like that. Exactly.
That's true. But when you trade Hang Seng Index warrants, they are crazy volatile.
Exactly.
Like you can see 20% up, 20% down in a day. No problem.
No problem. Exactly.
No problem.
You just gotta learn your trading strategy for that. So you put up perhaps like the risky part. You put up 10% into that, and then the rest of it slightly small into the different kind of underlying. So in that way, even the volatility is big in Hang Seng, but you're still able to take the losses.
Yeah.
You're still able to take the losses.
And that's real world. But let's say if I was a trading cup participant, I would look at something like maybe 3 counters that I would like, maybe 2 stocks, and one percentage, maybe a third, and maybe 1 chunk for Hang Seng. And then for that, I would prepare 1 call and 1 put. And then when I look at the Hang Seng, according to my whatever entry, exit points, my strategy, then I would know when I should be using the call and which put. I'm already ready with these 2 weapons.
Yes, exactly.
Not suddenly I see it moving downwards like crazy, a few hundred points, then I'm like, oh, which warrant did Miss Isabelle say? What? Pink was for puts, or was it pinks were for calls? Was it purple for puts,
Yes, exactly.
Be ready.
Exactly.
That your sword and your gun is already there.
Yes, yes. To be honest, it's more like preparing up your trading strategy, and it's not about just as in the price, entry price, cut loss price, or even take profit price. It's also about a lot of homework that you have to go through. The technical, once you have going through all that, you got to prepare about your equipment as well. So choosing the right warrants is also as important as structuring up the trading strategy itself as well. So Hang Seng, honestly speaking, I think that is also one of the good advice from Isabelle, where you don't have to really care much about the underlying, because the underlying it's an index itself. So to be honest, that is the way that you can make return consistently.
And then you can focus on one underlying instead of having to say, oh, today this one I'm jumping to DRB. Oh, today I'm jumping to hibiscus. Oh, today I'm jumping to DNEX. And then you're just all over the place.
Exactly. So you don't have to look at a lot of different information as well. It's much more easier, compared to doing up the homework and all those things. So it's
you do your homework one time, you focus on one little sector.
Exactly.
If not, you're jumping into different sectors every single time.
True. So the participant out there, so remember, look into this Hang Seng Index and try to make your homework for this Hang Seng Index warrants. So from there, I believe you are able to make a difference for your current portfolio at the moment. Okay, so we actually learned a lot of things from Isabelle today. Specifically, to be honest, it's like in this current market volatility, it's very, very hard for us to whether it's going up, going down, even we are looking some of these positive signs. So the market is still acting differently. And
then
it's
why
very,
you're
very
trying
hard.
to why people always try to forecast.
Exactly.
If an analyst who has spent their last 30 years analyzing it can't even forecast it accurately.
Exactly.
Then you can't out homework somebody like that and they still get it wrong.
Exactly.
You can't out analyze an analyst.
Exactly.
So why not you just do whatever the market tells you? If it's going down, I will make money if it goes down. If it's going up, I know how to make money when it's going up. If it's sideways, I know what to do to make money sideways when it's choppy like that.
Exactly.
Right?
So literally you just...
don't care. Up or down, the war goes on. I'm not Putin's friend, so I don't know what's going on. What will happen in next week.
If you're betting big on going up, as you can see, like in the March time, suddenly the war comes up. So, everything just goes down all the way. It's very, very hard, predict the future, as we mentioned that. So I truly believe that this is a very good strategy. And a big lesson, today. A big lesson that we learned from Isabelle to learn about how to trade on this warrants. For the participant as well, they're able to get this lesson. If you're able to attend this webinar, it's for your own good. And hopefully you're able to do better, in your portfolios and all this stuff. Okay, so very thank you, Isabelle, for your time today. Okay, Okay, so as we going through, we will have our next section on next week. Okay, next week we'll have our next section on 13th of September. It's Tuesday. So today we will end our section. We end our commentary section right now. So do stay tuned for next week section on this Tuesday, 12:45 p.m. at the same time. And we will have more markets update and markets briefing for you guys, where you are able to learn this trading cups competitions. Okay, and also, as very important, for the audience out there that haven't joined for this competition yet, please go on and join for these competitions, because as we mentioned just now, this is a very, very good platform, for you to start learning about trading and investing. And anyway, it's like virtual capitals, put up virtual capital 100,000 for you. You're able to learn a lot of different things: trading strategy, risk management, portfolio allocations, and just learning about all this investing stuff, something like that. So the tournament will resume at 2:30 p.m. later. So good luck, all the best to you, and we see you next week. So thank you very much, Isabelle.
No problem. Thank you so much. And a big thank you to you, and thank you to InvestingNote for joining us at our NagaWarrants studios today. I appreciate you guys coming in and stepping into our brand new swanky studios. And we can't wait to see you here again next week.
All right. Thank you. See you guys.